Hello traders, this is Rich from Tradesight. Just want to take a few minutes and walk you through how we profitably traded the Apple news event today. This is September 9th, 2014. This was the big product announcement event. There were a couple things that set up in Apple that pointed us towards a profitable trade and a very timely exit from that trade. And I just want to walk you through the setup, the tools that we used to guide us along the ways, and how we played that out over the course of the day. So without further ado, let's move on and take a look at the short-term Apple chart. All right, so here's Apple in the 5-minute time frame. I boxed out the gap that it had in fact left here. So we left this gap open in Apple. We started trading out above that, and at this point in the day, we essentially just left Apple alone. Came back down here to try and fill that gap until the actual news came out. So we're just leaving it alone until we started to see some action from the news event. And what happened is they walked it up, broke it out of the highs, you can see, but then, as you're going to see in a moment, we quickly filled the gap here. So after we filled the gap in Apple, that's when things first started getting interesting in Apple. And remember, these are the 5-minute bars here. So what we did was we went to our Murray math and found a level where it would be interesting to take. And the Murray math level wound up being that round 100 number. So back to the Apple chart with the setup. A couple key features here. The first one is that by sitting out the initial trading in Apple, what we were able to do was let something happen that needed to happen, which was having this gap fill on this initial release from the news. So all this did was just wash out everybody who had been trying to get ahead of the news and get long the stock. So it was very, very tough to stay with unless you wanted to watch the gap get filled and then drop even a bit lower and get upside down and trade. So we're just kind of biding our time, letting that happen. So what we did notice though was that we had a breakout setting up where if the stock was able to get back above this Murray math level, this zero ace level at 100, there was pretty high probability that the previous high was going to come into play here again today. So we took an initial position on a break over $100, and then we were planning to add once the stock broke over the previous day's high. It did a couple things. It gave us a little better average cost and kept us from buffered us from the sweep over the high and a potential pullback and retest at the 100 level before it started back up again. So what we wanted to do is get in at a little better cost. So you can see that as we go forward in time here, the first trigger at over $100 did fire, went a little bit higher, but ultimately didn't get going just yet. Then as we start moving forward in time, you can see that we do start heading up higher here, firing into the second portion of the trade. We had our eye on the Murray math levels again, and now this is the ultimate target up here. I'm going to sweep over this 103 area to try and hit that plus 2 ace level. You can see that we did get up right up to about that area, but didn't penetrate it. So that was a pretty key area right there. That in combination with the Tradesight Seeker gave us a really, really good exit idea in this particular stock. So let's move down from the 5-minute time frame now into the 1-minute time frame. So when we're trying to fine-tune entries or exits, sometimes we'll go down to that minutia level at the 1-minute time frame. So let's go down to the 1-minute time frame and see how that played out along with the Tradesight Comber study to see how much energy the stock had in it and talk about the trade management in real time. All right, so now we're down to the 1-minute time frame here. We've set our trigger at a cross above 100 for that initial piece of the trade. What we're going to see is that the stock starts to move along, breaks through that 100 level where we trigger long 50%. Stock hangs in there pretty well, never pulls back more than about 20 cents or so before starting to really start to put something together here. So just testing that 100 level. Now you can see that we are now penetrating the previous high of the day. Once we went through the previous high of the day, now we're long a 100% position with a pretty good average cost. That's going to be defendable. We're a little bit worried about that sweep above the initial high and pulling back, but we didn't get that. We got a pretty linear release. Now you can see that we're marching along here with our Comber study firing. We did our 9 bars up. Those are the green numbers. And now we're starting to pay very close attention to the magenta numbers. That's the exhaustion warning. When we get to 13 in here, we're going to be looking for a reversal. This is the smaller time frame. And once we get to that 13, as we progress forward here, that's going to be when we want to be on guard. or reversal. So we had a really nice release all the way up to the 103 level. And then we printed 13 bars up. So that's our exhaustion warning that we're going to reverse back to the downside. That's where all of my stock was sold. The initial purchase over 100 was sold into that candle where we produced that 13, and now we're tightening up a stop very aggressively on the remainder of the trade, which was the adder over the high of the day. You can see as this plays out now, we start to stall here, and then we start to break to the downside very aggressively. So this particular signal was right on time. Actually picked the high close in the 1 minute chart of the entire day for Apple before this started to roll back to the downside. Spent a little time here kind of gaming and kind of just floating down here, but things are going to really start to accelerate and pick up to the downside here as we finish out the session, and the stock ultimately closes well below both entries. But the important part is that we got a very good entry. We used our Murray math levels over 100. We added over the high of the day. We used the Comber study to detect the high of the day and to find a high probability inflection point. Got us out of the long side and interested in the short side here. So the traders who were in the laboratory, I called out that over the mic that we were going to go long 50% over 100, and then into the messenger for everybody, which was more the pattern play, if you will. That breakout over the high of the day was that textbook play after previously having filled the gap. So that's the way we played Apple today in Tradesight. Hope you profited from the nice movement. Remember, this is a lot of movement in one of the biggest companies in the world. So this is how you do it. You can play this with any size you want. Apple's plenty liquid, and that's the way we do it day in and day out at Tradesight. So as always, folks, appreciate you listening. And as we usually say, this has been Rich for Tradesight. Hope to see you again soon.